Welcome back to Halftime Report on CNBC-TV18. Now, we're going to be putting the spotlight on Quess Corp. That's the next management for today on the show. They reported their Q3 FY26 numbers. A steady show that came in, but we saw the headcounts remain flat on a sequential basis, a reduction on a year-on-year basis. Now, to understand the outlook of the company going forward, we have Lohit Bhatia, CEO at Quess Corp, joining us right now. Lohit, good afternoon. Thank you so much for joining us on the show as always. I want to start by talking about the headcounts, which have remained quite flat on a sequential basis, reduction on a year-on-year basis. One, what was the reason behind this? Any uncertainty in demand with sectors? And what is the outlook now for Q4 over here?
Good afternoon and happy to be here on your show. First and foremost, I would like to call it an almost perfect quarter from Quess Corp. Perfect in quotes, almost underlined. And I will, in that will be your, the question that you've also asked. If you really look at it, we've grown about 3% this quarter on revenues to 3,930. We've grown 4% this quarter on EBITDA to our all-time high milestone of 80 crores. And this is also a 28% expansion year on year. If you look at our adjusted PAT also taking for the, the labor code event, that's 62 crores. That's 19% quarter on quarter up and 29% year on year up. This gives us an EPS of 4.1 for our shareholders for this quarter alone. That again is an expansion of 19% quarter on quarter, 29% year on year. We have a net cash of 325. Our board has recommended an interim dividend of 5.
Sure. Lohit, we have all of those points. So we're just going to urge you to sort of get down to the head count, which has been flat on a sequential basis. If you could just give us more color on that.
Yes. So the perfect part I've already told you. Now I'll tell you the almost part. The almost part is that Q3 is a seasonal quarter. And you know this, that during Diwali, staffing companies hire more. Post Diwali, there is a technical ramp down by the customers for a brief period of few weeks before the new cycle begins all over again. This year, two events happened in Q3. Q4 was about Diwali. However, November, when the revamp and the build-up had to begin again, the government of India decided to make 21st November as the D-Day for implementation of the labor code. Now, when you have, after 78 years, such a massive event which takes place, every large corporate, including all the Q3 results you're seeing, paused for a moment and said, before we hire more talent, let us first understand implication of the law, the change that is required, what needs to be done to provisions and payrolls, and we will start again. So all the sales that we had done and booked for Q3 got shifted into Q4. So the event is a one-time event which kind of created a pause in the market. For something as large as this, I think we've still come out with flattish headcount, just about 500 up. I would still call it an almost perfect quarter.
So does that mean Q4 will be a perfect quarter since Q3 was almost perfect? Trying to understand sectoral outlook. BFSI has a big impact of labor code. So does IT. What are the trends suggesting now? They halted in Q3. Do you think they'll pick up in Q4 and Q1 of next fiscal?
Yeah, great question. Early signs that we are seeing from customers in the month of January itself, whatever was deferred in Q3 is coming back as sales orders and deals and transfers in January itself. We expect this to pick up more in February and March, as most of the companies which have reported their results have already taken provisions and baked in for the additional cost. I must also say this is a reset as far as India is concerned on code on wages and the way the wages will be done. So it will be business as usual going forward, and it will continue to gallop. Now, I'll come back to the specific sectors that you spoke about. While two of them in our three lines of businesses have been clear outliers in terms of good results and numbers, our professional staffing, IT staffing has delivered a 12.5% EBITDA margin and a 42% growth on year. Our international has delivered a 7% EBITDA margin and a 26% year-on-year growth. If you come back into the general staffing business, there is a mix of volume business on one side and a value business on the other side. It's the volume business which got impacted, which is consumer, retail, telecom, and banking. Whereas our value business, including manufacturing, actually grew 4,000 even in Q3. That's not visible because overall the numbers have been flattish. Now, manufacturing is an India story. It's been doing well in the last couple of years. It's now 80,000 of our 483,000 book. And this is some place where we continue to deeply keep investing, along with newer segments like construction, which again is a long-term play for us.
Right. We're going to leave it on that note. It's been a pleasure, but we've completely run out of time, Lohit. More details the next time we speak, but thanks very much for joining in and speaking with us. So headcount has been flat on a sequential basis. Labour code impact has impacted Quess Corp this quarter. That stock up around 2.5%. We'll take a short break. On the other side, we'll bring you excerpts from our conversation with Hitachi Energy from the India Energy Week 2026. Stay tuned.